So, Michael, how are you doing today?
Good, good. Thank you for having me. It's getting much nicer in Chicago. We were hitting, I think, 10-degree highs weeks ago, and now we're up into the 50s and 60s. So it's feeling like spring is finally here and COVID is ending. So all is well.
Fantastic. Well, pleasure to have you here with us today. Michael today is going to present for everyone their multi-asset Class A multifamily national opportunity zone fund. You invest in properties all over the country. So, Michael, the floor is yours. If you have a
Great.
slide deck to share, you can do that now. And
Well, thank you. So my name is Michael Episcope. I'm co-CEO and co-founder of Origin Investments. I want to thank everybody for attending today and spending the time here. I know all of you are here today to possibly learn, but probably to figure out who to partner with over the next 10 years. And my goal over the next 15 minutes is to make sure that I convey the value proposition of Origin and why partnering with us in our QOZ fund will provide the greatest possible experience for you over the next 10 years. And I use the word experience because to us, a good investment firm not only focuses on generating great returns, but also the client service side. And when you have a 10-year investment, it's really important, the reporting, the client service, that somebody's going to be there. And we're set up to deliver both. What I'm not going to talk about today are any of the QOZ benefits. I assume everybody is well versed there. They know enough. I'll spend 5 minutes talking about Origin, our platform, our competitive advantages, and then the rest of the time, 10 minutes on the fund, and cover two assets in our pipeline as well. And again, by no means will this be comprehensive. So if you want to learn more, or I get the hook a little bit early here, please go to our website at origininvestments.com, and you'll be able to connect with somebody in our investor relations department directly. All right, so let's get started. Let me start with about Origin. So my partner, David Shear, and I, we formed the company in 2007, and it was really more like a family office in the beginning and a way for us to grow and protect the wealth we had accumulated in our previous careers. And I'm proud to say that we're still the largest investors today at the firm. We've invested close to $60 million of our personal capital into deals during the last 12 years. And one thing I really want people to understand and know about Origin is that alignment is a core value of our company. It has been since the day we began. And it's about us being aligned with you, us being aligned with our team. And so everybody's aligned together. And we really believe that decisions are better. And it's when everybody is kind of rowing in the same direction, and when everybody's outcome, they all benefit from the same outcome as well. But I do want to be clear, we don't invest to align ourselves. It's not a check the box type of investment. We invest because we believe it's the best place for our capital, and we happen to be then aligned as a result. And my partner and I, even in this fund alone, we have $9 million of personal capital in this fund already. And we will continue to increase as we get more and more capital gains to do so. But that's where we are today. We as a company, we invest in 11 growth markets. That hasn't changed. This is nothing new for us in the QOZ fund. We've been in these markets for the last 10 to 12 years. And our QOZ strategy is really about finding deals, what I'll call around the edges, on the fringes, in transitional growth areas. And so, you know, in a few of our deals, we're actually right on the border of the QOZ zone. In Chicago here, we have a QOZ deal. The other side of the street is market rate. In Phoenix, the same thing. The QOZ border goes down the line. And so we've always been focusing on these transitioning neighborhoods on the edge of growth. And that's what, excuse me, I need some water. That's what we've always done. And we've operated 5 funds to date. We've had no losses across any of our funds. And the consistency of our returns was recognized by Preqin. They're a third-party firm that evaluates fund managers. We send all our data in, and they were actually recognized us as a consistent top-performing manager. That was sort of the moniker that they gave us. And our first 2 funds were top decile. Our third fund was top quartile. We have currently an income plus fund that's open-ended. It's too early to benchmark. And then we have the QOZ fund that's also too early to benchmark. Today, we serve more than 1,400 investors, and our partners come to us both direct, and we work with about 24 registered investment advisors. And if you are a registered investment advisor listening to this today, you should know we are on FactRight. We've done our due diligence on that. So all of our due diligence documents are listed on the FactRight website that you can access on that as well. We have a team of 28 people, and the firm is really organized around our two main objectives: delivering great client service and generate high risk adjusted returns. So our acquisition and investment management teams, they are responsible for everything from investment strategy to identifying opportunities, getting properties built on time and on budget, and managing them once stabilized. Our IR, investor relations, and our marketing team, they're focused on the service side of the business. And they're responsible for when you come in, learning about Origin, onboarding, educating you, ongoing reporting. There is somebody there if you need them. And client service is something that we pride ourselves on. We hold regular webinars on a monthly, quarterly basis for all our funds and investments, so you are always up to date. We are headquartered in Chicago. We also have 3 regional offices. The regional offices, they serve as a hub for deal sourcing. So those generally have 1 to 2 people in them, and they provide a tremendous amount of deal flow, but they also give us the unique ability to invest nationally while maintaining a local presence and pulse on the ground so we know what's happening. I'm going to jump into the fund overview here. So I'm going to do a time check. We're at 2:18 right now, so I think I'm close to on time. The core of what we're doing is we are developing Class A ground up multifamily projects in our target markets. And it's the intention of holding them for 10 or more years. And this is what we call a build to core strategy. And that's a common name in the market. You're taking ground up development risk in the beginning, and then you're holding a Class A property for the remainder of the term. We typically, when we talk about risk and financial leverage, we are typically 65%. We do not use preferred equity. We don't leverage past 70% in any of our properties, and that is a loan to cost. We also don't guarantee debt. That's not a fund that we, or a risk that we or the fund will be taking. And our base case projection on this fund is a 2.5x net multiple over the hold period, over the first 10 years. And so what that means is that if you invest $1 million, you can expect to generate $2.5 million, or get $2.5 million in distributions through both cash flow and appreciation. Now, that does not take into account any of the tax benefits either. So this isn't on an after-tax basis. Those are net returns, cash on cash. Our tax benefits are the same as every other fund out there. Now, once the portfolio is stabilized, meaning all properties are built and leased, the fund will generate roughly a 6 to 8% annual dividend, and that's based on your invested capital. So again, $1 million, $60,000 to $80,000 per year, and that's again starts in about 3 or 4 years. But all that will be shielded by depreciation. Now, in the first 5 years, we expect to return at least 40% of capital through both operational cash flow and refinancing proceeds, because we all know that everybody has a huge tax obligation. We have that tax obligation. You do as well. And our goal is to send back as much cash between now and 2026 as we can through those various activities. So let me jump on into the portfolio. So what you're looking at in front of you here is our current portfolio. We have 5 assets in the portfolio. We've invested around $92 million in total into these assets. And you can see the expected stabilized value to the right. So what that is our margin, what we expect them to be worth upon delivery. And you can see that we're well diversified. We have assets in Charlotte, Houston, Phoenix, Chicago, and Colorado Springs. So in this fund, we've raised around $140 million to date. So all of these projects have more than enough funding. And then we've also raised capital for some of our pipeline deals, but we have much more in our pipeline. Our pipeline is somewhere between $40 and $100 million that we expect to close later this year. And I'll talk about 2 of those deals today. I will say that this fund will be open until the end of this year for investing, and then it will be closed. That's contractual. We've had a 3-year investment period, and then we will most likely be opening up our second QOZ fund. When this is done, it'll probably be between $200 and $250 million of equity and 8 to 10 assets, geographically diversified as well. And what makes our fund unique is that you're investing into an existing portfolio of assets that are at all kinds of different stages. Some of them are only land today. Some of them are obviously pipeline assets. But two of them, as we speak, are being delivered to the market. They're actually going into leasing, their lease up this week. So it's an advantage right now. And we only recently started marking up the fund. So for 2 years, we held our unit price stable at $10. We had a markup on January 15th. The unit price is now $10.54. And what that means is that if you're investing today, you'll be buying units in the fund at $10.54. And that $10.54 will be honored through 3/31. And then we will revalue the fund after that in April once those end numbers. So there's still another, call it 20-ish days to invest in the fund at that $10.54 before we mark the assets to market again. I always get the question, how much is it going to go up? That's not something we know today. We believe it's going to go up. And it's also just a fair way to do business because a lot of people have been in this fund for 2 years, taken early risks. Some of our investments are now coming online, and now it's time to start writing those assets up. We haven't written them up tremendously, but we're starting to now, especially as they start to come online. So let me go over, that's sort of the overall portfolio view. And now I'm going to dig into two deals. One is Alon Pikes Peak, and the other is sorry about that, going back. And then another deal that we're in Houston as well. Pikes Peak, this is a 322 unit multifamily project. This is in the heart of downtown Colorado Springs, and we're partnering with Greystar on this. And we're in the process of going vertical. And I'll share with you maybe just a few of the highlights that we like about this opportunity. Colorado Springs sits an hour south of Denver. It's been largely passed over for new development. And a lot of that has to do with sort of the city level and anti-development attitude for many, many years. But in the last several years, that has changed with the new administration. So you have this market that really sits in an amazing location in the front line, transportation corridors, job center, everything, and all the things that made Denver so great to live in, being a lifestyle city, the affordability, kind of finding a new untapped market. Well, that's all changing. Denver has grown rapidly. Its housing prices have expanded. It's not nearly as affordable as it was, and a lot of that population is now moving south. And we're really excited about this market. This is one of two assets that we're actually buying in this market that will be in this fund as well. The other thing, when we look at the asset itself, we're getting a large tax abatement on this property, and that will save us. It's a 75% tax abatement. So just for round numbers, if our tax bill should have been $400,000 on this property, it'll only be $100,000 because that tax abatement, you actually get a relief from your taxes. And what that does then, it not only creates a lot more cash flow for the property to service debt, et cetera, creates downside protection, it also creates a much higher yield on the property and the overall fund itself. So we're one of the first movers. We're not the first mover. There are other projects in this neighborhood that have corroborated demand, but we're really excited for all of not only the market itself, our location, partnering with Greystar, but also the fact that we were able to secure that tax abatement on this deal. So that's what happened. When we're excited about a market, we like to go deep. That's why we're looking at another property in this market as well. All right, so let me go over this. This is Fourth and Navigation. This is our Houston project's 300 unit Class A apartment. This is in the East End neighborhood. And if I had to give kind of an analogy, this is like the Wicker Park of Chicago. This too has a tax abatement on it. This tax abatement, we estimate the value is about $8 million. This property is about a 1 mile from downtown. It's from the downtown core of Houston. And there's a lot of reasons that we're excited about this, but this is sort of indicative of what we are building in the fund. And this project is in lease up as we speak. So you can see the gain on this project is what we've written it up in the fund. And part of that increase from $10 to $10.54. And you can see our initial equity and then our expected value at stabilization. So a lot of margin in this deal. And the interesting thing about this particular deal was that when we underwrote it and we approved it, we actually didn't have the tax abatement. And that was something that we added on after the fact and just helped to kind of juice margins in the deal. Pipeline, this is Alon Weber Street. This is a carbon copy of Alon Pikes Peak. This will be closing in July 21. This deal is a mile down the street. We're also getting a tax abatement on this particular deal. This will require $24 million of fund equity as well. And the last one I'll talk about is District West. And District West is a 247 unit property. This is a pipeline deal, a late summer closing. And this is in the meatpacking district of Orlando. And there's a lot of things we love about Orlando. It's a growth market. It's in a tax-free state. Certainly it got hit from COVID, from the entertainment shutting down there and a lot of the parks and centers, but that is starting to reverse itself and people are coming back. So I think this one, breaking ground in July, August of later this year, will be great to embark on this project. So another one that we're truly excited about. And lastly, if anything I said here today interests you and you want to find out more, you're interested in partnering with us, you can email us, investorrelations@origininvestments.com, or visit our website and connect with somebody in our investor relations department.
Fantastic. Thank you, Michael. Great presentation as always. We've done a few of these together now, so always glad to see you here. Have a few questions. We'll try to see if we can get to one or two of them. Okay. Nick wants to know, can we invest in individual projects?
So yes and no. We don't have any individual projects today, but something like Alon Pikes Peak, we did syndicate that, but we only syndicated that to existing investors. And so what you see in the fund, we actually syndicated half of that deal. It was a $15 million syndication. It took us 48 hours to fill that deal up. So if you're not in the fund, you won't see the sidecar opportunities most likely.
And then do you give your investors K1s or 1099s?
K1s. Yeah, this is not a REIT. There's a K1. They might get multiple K1s from this, but we do, as a courtesy to investor, consolidate the K1 so they get as few as possible.
And one or two more questions here. Nita asks, what social impact do you expect on the Alon Pikes Peak project?
So in all of our deals, when we're looking, when we're doing QOZ, this is a jobs program. And I would say the social impact here, like if we're looking for how we're improving neighborhoods, et cetera, that's going to be more difficult to really look at that. We're creating jobs here. We're creating permanent jobs. We're improving the community. We're bringing a neighborhood to life. We're definitely one of the first movers here, which is why we got the tax abatement as well. And generally what happens with the city is early movers and those who are willing to take risk and invest in these downtown areas and revitalize communities are going to receive tax abatements by the city. But the city doesn't want to give away money. So once we have our projects up and running, new developers coming in, you'll see that go down to 60%, 50%, and then disappear. And we did this in Chamblee in Atlanta, where we were one of the only properties to get a tax abatement. And then all of a sudden market rate development happened around us. So the social impact, if you've ever visited Colorado Springs, it definitely needs development. Development has passed it over, and we're taking the risk to come in here. So that's about as good as answer I can give you.
Fair enough. And real quick, remind us, what is the minimum investment again?
So the minimum investment in our QOZ fund is $50,000.
Fantastic. Okay, well, we've got quite a few more questions there. Unfortunately, we have to run out of time. We're not going to be able to get to all of them, but if you do have more questions, please email Origin Investments. Their email address is on the screen there, investorrelations@origininvestments.com, or you can visit their website, origininvestments.com. Michael, thank you so much for joining us today. I've got to move on to the next one, but I appreciate your time.
Thank you, Jimmy. Thank you. And thank you to everybody.
Absolutely.